What's up everybody, welcome back to Earn It, Save and Invest It. In this video, I'm going to show you how you can make $1 million with just $1,000 investment, and you have to let it ride for a little bit, but you just put $1,000 in it and you can become a millionaire. Now, you can buy the stock at its height, right before a crash. You could buy it right before the crash and yet you could still become a millionaire. So I'm going to show you it's simple math, and I'm going to break it down on how you can just invest $1,000 today, invest zero more, right? You don't have to put any more over the next 10, 20 years, whatever, and you can become a millionaire. So we're going to break that down really quick. But before that, if you can, give me a like and subscribe. I really appreciate it. Anybody who already likes and subscribes and watches it, I do appreciate it. But I'm going to break down the stock. And as you can see with the name right here, right? TQQQ. And it is one of my top holdings of my portfolio. This is my 100K challenge where I currently have $8,692. This is my top weighted position, and I have 30 shares of it. I bought it at $21.48, but it was actually at a higher price than that. It did have a stock split. So it was at a different price than that, but my average price, right, the cost of it is $21.48, and it's currently at $54.49. So I've over doubled it. And so I did the math, and these were all the dates, right? Right now it's at $54, okay? These are all the dates, right? The IPO where it was at its peak, right? At its peak. Now let me show you, right? This is TQQQ at the peaks. Now all of these triangles are representing basically a 20% drop off, and I put these markers on there. Let me see if I do it this way. I put these markers on here to all these triangles to symbolize a 20% drop, and then these are like, okay, this is when you buy at the top, and then it drops pretty significantly, but this is a top that stays there for a little while, right? Let's just say you put the full $1,000 in at one of these moments, right? If I said you put in your $1,000 here, I mean, it went through a 20% crash and then it kept going up, but that was like a slight top, right? Over here, a top in 2015, it dropped 44%, right? If I said you're going to put your money right here, you're going to put your money right there, $1,000 in, and it's going to fall 44%, how are you going to feel about that? Are you going to feel good about that? Are you going to feel bad about that? Now, granted, everyone would feel better if you bought down here. No one's going to dispute that. But if you bought right here, and if you even look at the price, it's pretty good. But if you bought here and it went down 44%, most people would say, I wouldn't want to buy that. If I invested $1,000 at the very top, I wouldn't want to do that. So I did the math. I said, okay, let's see what happens. So these are all the dates that I considered those tops. These are all those red lines, right? This is the price. Now, at its current price at $54, this is all the compounding interest you have. Now, these might be off, honestly, by maybe a little bit of a percent. I did this last trading day or two. So if you don't know what TQQQ is, actually, I didn't even exactly describe what it is. TQQQ is like an index fund, and it tracks the Qs, QQQ. The Qs track the NASDAQ. The NASDAQ is a big bubble of all the technology companies, right? The tech companies, the biggest companies out there, the fast-growing companies. They're all in the ETF. Well, the Qs, they track it. Basically, however much the NASDAQ goes up, the Qs go up the same, right? NASDAQ goes up 5, Qs go up 5, basically. Well, the TQQQ is 3 times that. So if TQQQ is going up, or if QQQ goes up 1%, then TQQQ goes up 3%. If QQQ goes down 1%, then TQQQ will go down 3% as well, right? So it's definitely more volatile. It's a higher risk stock, but it also has higher reward, and I'm going to explain why. So these were all the different periods, right, that you could have gotten the stock and all the different dates and all that stuff, right? So as you can see here, We have the current price 54. The IPO is here. Look at that, 20 cents, 33 cents, 40 cents, 60 cents. July 15th, when I told you that was that date, right? It went 44%. It dropped. It was at 260. It was at 260. This is how many shares you would have got if you had $1,000 and then you bought as many shares as you could of TQQ. How many would you have, right? At 33 cents, you'd have 3,030, right? That value today would be $166,000. Now we're talking $1,000 invested and 15 years. The compounding interest, if you look at all of these, for the last 10 years, it has consistently performed at a 40% compounding interest. 40%. Do you guys want to know what 40% looks like? $1,000. This is real. $1,000 for 21 years. Now, you might, 21 years. You put in $1,000 right now, your 21-year-old later self will be thanking you. And you didn't have to put in another dime. $1,000 for 21 years. Your rate of return is 40%. And you contribute how much extra? 0. This is how much you'll have. You will have invested, total amount contributed, $1,000, and you will have 1.1 million. Right? I mean, that seems, the math is there. The math is just simply there. I mean, I spent 6 minutes and I'm breaking down the simple math. That is just simple math. I'll show it to you one more time. Let's go over it one more time, right? To just break this down. And actually, let me show you this. Let me show you the chart, right? Let me show you the chart. So this is TQQQ. And if we're going through the chart, right? Again, July, right here. This is where it was, right? Remember I said that big drop of 44%? Look where it is now, right? Now you might be like, oh, well, I mean, it's crazy. It's like that right now, right? But over all these years, it's consistent with 40%. So if you bought any point here or before, it's at 40%. Obviously, it drops off here because now we're getting closer into the time frame, right? The point is, though, if you invest into this, you can invest $200. Let's start going over some scenarios. Let's start going over some investing scenarios to see what realistically you could do, right? Let's say over the next 10 years, you invest that $1,000 over a 40%, right? $1,000 turns into $28,000. Now again, $28,000 does not seem like that much, right? You're like, oh my God, 10 years? But 10 years ago, if you had put $1,000 into a stock and now you have $28,000, would you be happy? You would. You'd be very happy that you did this. Now, what if you said, you know what? I don't need that right now. I don't need that $28,000. Now, probably a lot of us do. Right? Yeah, I'd like to use that $28,000. But what if you said, I'm going to resist. I'm not going to do it. Not going to touch it. I'm going to hold on to it for another 10 years. Boom. You're almost a millionaire. You went from $28,000 to $836,000 by not touching that money. You will have times that it will go down 50%, it'll go down 44%, it'll go down 30%. It's going to go down. That's going to happen with that stock. Okay, over time, it's going to keep going up. Now, if you are at all involved in the stock market still, right? If you invest $1,000 into the stock and you're like, oh man, I just invested at the high, right? And you see it starting to really crash and go down, buy more. I mean, I know that's a little scary to think about, right? But let's just take that 1,000 over the 20 years and let's just make it 1,200. That gave you an extra 200,000 almost. 100, what was that? 150, right? $164,000, right? Just for investing that extra $200, right? And you could have bought it at a better, you would be buying it at a better price. So your rate of return would be a lot better. So again, it's just something to think about. It is a high risk, high reward stock. I want to put that out there. That has to be a disclaimer for sure. But it is a stock that can make you a lot of money. You know, it can make you a lot of money if you invest right, you watch it. You know, I would say, hey, just, you know, maybe not right now. We're kind of like at the high. But that was why I did this. That was why I did that, you know, that chart. To be like, okay, well, what if I just invested at the high every single time, right? Seems like it didn't matter. Didn't matter. And that was investing at the highs. All of those rate of returns were at the high. Imagine if you had invested in the lows. Let's say, let's break it down in the middle, right? You'd be having a lot more. So again, this is just something to really quickly to show you how, and one thing I want to show is not just how much money you can make on the stock, because that's obviously a big point. But another big point, because this whole channel I've created, you know, I have 2 kids and I want compounding interest. You know, I tell them every night, I have this saying and it ends with compounding interest. I want them to understand the power of compounding interest. I want people to understand the power of it. And what it really comes down to is the power of time. If you are saving for 10 years for this $1,000 at that 40%, yeah, you get $28,000. But you keep it writing for another 10 and you're at 836. That is a way bigger difference. So, you know, you got to let it ride. You know, you have to let it, you know, if you feel like the company is good, which again, this is an ETF, it's a big bubble of companies. You know, if you feel like, hey, over this next year, it might crash a little bit, buy some more. Just buy some more. Because if you're going to be invested into it in the next, now, if you are 70 years old, 80 years old, and you think you might die in the next 5 to 10 years, okay, I get it. You might be like, let me put something to safer. So that way, when I need to pull out money and I'm having problems, or I need to do this, I need to do that, my money's not down 50%. I get that. That makes sense. But if you are 20, 30, 40, even 50 years old, even 60 years old, right? Most of us, I think, unless there's something medically going on with us, most of us, I would assume, we're kind of thinking 75, 80 years old, right? I mean, I think 80 years old is kind of a good benchmark for most of us. We're like, yeah, 80 years old, right? My grandma's 95. It might be in my blood. I might be here for a long, long. I might be able to really pound on this compounding interest, right? But the point is, even if you're 60 years old and you invest for 20, you know, you might have all this money. You can pass it down. You can do something with it. You will be able to utilize it. You know, I can go through, let's go through a couple more scenarios. Let's go through a couple more scenarios really quick, right? Let's just say you take 500 and you invest it over 20 years, right? Boom. But now, let's say 25. You're a 25-year-old. You invested $500. You're now 50 years old and you have $2.2 million. $2.2 million. $2.2 million on an investment on $500. Now check this out. This is going to blow your mind. Watch this. Let's say 20 years, you did 30%, right? It's going to be less, right? And I want to do this. I want to do 30%. So we have to keep this in mind. I just took it down a notch. I knocked down 25% in interest. That does a lot more than just knocking down the value of 25%. You saw I went from 836 down to 95, right? That's a big percent. That's a lot bigger than just a 25% cut, even though I only cut 25% of the interest. But let's say you invested every month an extra $25. Look at that. Look at that return. Now let's go back up to 40%. You have $1 million. 20 years, $500, and you invested just $25 a month. Think about that. All you had to do is invest $25 a month, $500. You start off, and in 20 years, you could be a millionaire. Sign me up. sign me up. Let's do it. I am not buying any more of that stock particularly right now, specifically because I am involved in the market pretty heavily, and I do know there is going to be a time where it drops below this current price significantly. I think it's going to drop back into the 20s at some point. I might start adding on a little bit here and there, but it's also the top weighted position in my portfolio. So, and I already have that much invested into it. But at the same time, you just say, well, what are the stocks better? There's no real stock that, you could say Nvidia, right? And Nvidia, but like you're really trying to really catch gold on that one, right? You're really trying to say, okay, this one company is going to do well. This TQQQ is just based on a bunch of companies. This has a lot of Nvidia in it. It has a lot of Tesla. It has a lot of Apple. It has a lot of this. And what's crazy is that a lot of those stocks have gone down and done stuff throughout those time periods, and yet it's still performed at 40% compounding interest. Nvidia wasn't this big conglomerate for all those years since 2010. It just started, like 3, 4, 5 years ago? Not even that long ago. So, just something to think about. The bigger thing to think about is this high risk, high reward. I'm not giving you any financial advice. This is do it all on your own, risk and everything. But it's just a way of showing you how something like that, if you invest something, you kind of just let it ride. Hey, I'm not going to do much. Maybe I invest a little bit every month, but whatever. Those are the scenarios I just presented with you. The $500 with $25 a month. You could be a millionaire. Just $1,000, drop 1,000, boom, let it ride. You'll be a millionaire at some point. You will. So, again, that's just my 2 cents, and I hope you enjoyed it. Please give a like and subscribe. If you liked all that stuff I was just talking about, TQQQ, again, be careful. It is a high risk, high reward, high volatile. It is a 3x leverage stock to the Qs, but it's also highly profitable. So take a look, invest at your own risk, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.